Should I buy a home in 2025? Well, as a real estate agent here in San Antonio, this is a question I get asked a lot. And from scrolling through the internet, I can see that I'm not the only one getting this question. I want to get right into the video with taking a look at this question on Reddit from someone who asked, should I buy a home in 2025? And he provides a bit of context as to his situation. So he says, hello, I'm wondering if I should buy my first house this year. I am 28 and I have enough for 5% down payment on $350,000 home. I got pre-approved for 6.9% interest rate. Now, with the given state of the economy, politics, is it smart to buy in 2025 or wait for the market to change in the next year or so under the new administration? What do you guys think? Your expertise and knowledge is very appreciated. Thank you. So this comment was of 4 months ago, and I thought this question was very relevant, right? Even though it's 4 months, it's still a great question. But what I want to do here for this particular scenario is kind of break down the information that he's provided when it comes to the purchase price, down payment, and interest rate, and finding out the other numbers involved that account for an actual monthly mortgage payment. That's what I want to do. So let's get right into a cost breakdown given some of the information that he's provided. So what we can already kind of insert here, I wrote a couple things down prior to, but we're going to find all this information out. But just know that these are some of the numbers that we're going to be trying to search for and kind of put to the monthly mortgage payment. But let's fill in what we have so far. Okay, so he mentioned that he's looking for a home with the purchase price of $350,000. Okay. He also mentioned that he has a 6.9% interest rate. And he also mentioned that he had a 5% down payment, which we want to turn that into an actual number. So 5% of $350,000 is actually going to be $17,500. So that's the actual down payment. So what I've added here is going to be the new loan amount, because that's going to be important as we go through the video on certain occasions. So the way we find out the new loan amount is going to be subtracting $17,500 from $350,000, right? So these two numbers here is going to equal to $332,500. Okay, so that's going to be the new loan amount, and we'll talk about that going forward. So the next item I have here for us to get, right, as far as information, is going to be the principal and interest. How do we find that out? Well, the principal and interest is going to be broken down by finding by utilizing the new loan amount number and the interest rate. So $332,500 with a 6.9% interest rate. Well, that's actually going to be $2,189 for just principal and interest. So now we have to find these remaining numbers. So let's talk about property taxes, because it's going to be the next number we're going to be trying to find. Now, property taxes, we're located here in San Antonio. And as you know, Texas has higher property taxes. And for the sake of the example, we're going to use 2%. Yes, there's times where it's going to be 2.7%, 2.5%. There's even some occasions where it's 1.8%. And so that's going to be dependent on the area in which you choose to purchase a home, whether it be new construction or pre-owned. It's the specific area that is subject to a specific property tax rate. And so for the sake of this example, we're going to use 2%. And if you're still here and have gotten any value out of this video, then feel free to subscribe to the channel and hit that bell for notifications. That way you can be a part of our growing community. And if it's the first time to the channel, then my name is Frank, and my wife Alyssa and I, who run a husband and wife real estate team, get calls, texts, and emails from people just like you looking to buy homes right here in San Antonio. So if that's you, then don't be shy or hesitate. Just give us a call, send us a text, or shoot us a quick email. That way we can help you make a smooth move right here to San Antonio. Now back to the video. So the way we find the number, right, when it comes to 2% is we're actually going to go based off the actual purchase price, because the county that you're going to be purchasing your home in, they're going to utilize the actual purchase price of the home because that's the value of the home. So let's see, property taxes. So all I'm going to do here is actually going to be PT, which is going to be property taxes. So what we're going to want to do is we're going to want to put 350,000 times the 2% property taxes. So annually, that is going to be $7,000, right? So now what we want to do is we want to try to find the monthly payment there. So we're going to simply take $7,000 and we're going to divide that, right? Just utilize it like this, divide it by 12. Now dividing by 12, that's actually going to be $583.33. Excuse my writing here, but it'll be a little bit prettier here over here on the left. So now that we have the monthly property tax rate, we're going to put that into effect. So $583.33 is going to be the property taxes. Now we're going to talk about homeowners insurance. Now, homeowners insurance, it's going to depend, it's going to vary on what your cost could be. But for the sake of this example, we're actually going to use $125. It's going to be dependent on who you choose to go with. So you can actually call around, see who has the better cost and the better pricing, should I say. But for the sake of this example, we're actually going to say that on average, it's roughly $125 a month. So now that we have that number, we can move on to finding out the private mortgage insurance. And we don't mean to insult anybody's intelligence here, but in case you don't know what PMI is, it's going to be on a lot of the different loans, right? So private mortgage insurance, what that is insurance for the lender, that private lender, whether it be a bank, a private lender itself, just a lender in general who's going to provide you with the money to purchase the home. They're going to want insurance on the amount of money that they're loaning out. Now, should anybody default on the mortgage, that's why they have insurance on mortgages. So for the sake of this example, we're going to use 0.75%. So we're going to say that private mortgage insurance, private PMI, we're going to use the actual new loan amount. So we're going to go $332,500 times 0.75%. That's a percent there. Sorry, it looks like an 8. Got a little sloppy there. But we're going to see that it cost $2,000. So what I'm going to do is I'm actually going to lower it here. I want it to be somewhat clean, right? So $2,493.75. So that's going to be annually. What we want to do is going to be divided by 12 so we can see what our monthly payment for PMI is going to be. So this divided by 12, well, that's going to be $207.81. So that's going to be monthly. So we can add that over here, and we found our next number, $207.81. Now, the closing cost. This is going to be an amount in addition to the down payment that we recommend that you actually have prior to searching for a home, right? Because if you have enough for a down payment and enough for closing cost, it's more than likely that you're going to be qualified and solid for an actual mortgage. And so closing costs is going to always change. It's going to be ranging from about 2% to about 5%. And so for the sake of this example, we're going to say that we're going to use 3% of the actual purchase price of the home. So based on, right, so we're going to do here, we're going to go CC, closing cost, and we're actually going to go $350,000 times 3%. Now, what that comes out to be is $10,500. So now that we know that, we can fill in the blank and put it here. So closing costs, you're actually going to pay that when you go to the closing table, when you've purchased the home that you like, go to the table, sign everything, sign all the documents, pay the closing costs, and receive the keys once it's closed and funded. Now that we know our closing cost, we kind of have all of our numbers. So the question now is, what is going to be our actual monthly mortgage payment? Because we know that our principal and interest is $21.89. And this is where we figure these numbers out. So what we're going to want to do is we're going to want to take a look at our principal and interest amount. We're going to want to add our property taxes. We're then going to want to add our homeowner's insurance. We're then going to move forward and add private mortgage insurance. Remember, these things are monthly. And once we've calculated these four numbers, we are going to know our new monthly payment, which it is going to be $3,105.14. That is going to be the new monthly mortgage payment. So now going back to the question on Reddit of whether or not he should buy a home in 2025. Well, my answer is if you can comfortably afford a monthly mortgage of about $30,100, then yes, buying a home is a great investment. Now, of course, these numbers will fluctuate if you have a different property tax rate, homeowner's insurance rate, or even a different PMI rate. But overall, you should be prepared to spend this estimated amount monthly for a home of $350,000. So I hope you got a lot of value out of this video. And if you have any questions, please feel free to drop them in the comments below or reach out. And if you're ready to start the conversation, my wife Alyssa and I run a small husband and wife real estate team here in San Antonio, Texas, and we get calls, texts, and emails from people just like you looking to buy homes right here in San Antonio. So if that's you, don't be shy or hesitate. Just give us a call, send us a text, or send us a quick email. That way we can help you make a smooth move right here to San Antonio. We hope you enjoyed the video, and we'll see you in the next one.